Cryptocurrency operates on blockchain technology, which is a decentralized digital ledger that records all transactions securely and transparently, ensuring no single entity controls the network, making it resistant to fraud, censorship, and manipulation, while enabling peer-to-peer transactions without relying on traditional banks or financial institutions. Bitcoin, the first cryptocurrency, was created in 2009 by an anonymous individual or group known as Satoshi Nakamoto, aiming to establish a decentralized, borderless digital currency that allows users to send and receive funds globally without intermediaries, relying on a secure proof-of-work consensus mechanism for validation. Ethereum revolutionized the crypto space by introducing smart contracts, which are self-executing agreements that operate on its blockchain, enabling developers to build decentralized applications, dApps, and creating an ecosystem where transactions, services, and digital ownership can be automated without the need for centralized authorities or intermediaries. Stablecoins, such as USDT and USDC, are cryptocurrencies designed to maintain a stable value by being pegged to real-world assets like fiat currencies or commodities, making them ideal for traders and investors seeking price stability while benefiting from blockchain technology's security, transparency, and global accessibility. Decentralized finance, DeFi, is transforming the financial sector by offering blockchain-based lending, borrowing, and trading services without intermediaries, allowing users to earn interest, provide liquidity, and trade assets in a permissionless manner while maintaining full control of their funds through self-custodial wallets and smart contracts. Non-fungible tokens, NFTs, represent unique digital assets stored on a blockchain, enabling ownership of digital art, music, virtual real estate, and collectibles, giving creators a way to monetize their work while ensuring authenticity, scarcity, and verifiable ownership through cryptographic proof embedded within the token's metadata. Mining is the process of validating and adding new transactions to a blockchain, requiring powerful computers to solve complex mathematical problems, securing the network, and earning miners rewards in cryptocurrency, with Bitcoin using the energy-intensive proof-of-work model and newer blockchains exploring eco-friendly alternatives like proof-of-stake. Proof-of-stake, POS, is an alternative consensus mechanism where validators are chosen to verify transactions based on the number of coins they hold and stake, reducing energy consumption significantly compared to proof-of-work, while ensuring network security, faster transactions, and incentives for long-term cryptocurrency holders.